Breaking news in the world of finance: millions of Americans are struggling to get a mortgage due to bad credit. According to recent statistics, approximately 30% of the population has a credit score below 650. This critical issue affects not only individuals but also the overall economy. The urgent need for solutions has led to the development of new mortgage options. As of 2022, lenders have started to offer more flexible credit scoring systems. Welcome to our channel, where we provide you with the latest news and expert advice on finance, investment, and real estate. If you're looking for the best tips on how to manage your credit and get a mortgage, you're in the right place. Don't forget to subscribe to our channel for more exclusive content and hit the notification bell to stay up to date. Our goal is to help you make informed decisions about your financial future, whether you're investing in Apple stocks or buying a new Tesla. To understand how we got here, let's take a step back and look at the history of the mortgage industry. In the early 2000s, lenders began to offer subprime mortgages to borrowers with poor credit. However, this led to a housing market decline in 2008, resulting in a significant increase in foreclosures and a subsequent credit crisis. Since then, lenders have tightened their credit scoring systems, making it more challenging for individuals with bad credit to get a mortgage. The situation has become even more complex with the rise of cryptocurrency and AI technology in finance. Now, let's dive into the main story. If you have bad credit, it's not impossible to get a mortgage. In fact, there are several options available, including FHA loans and subprime mortgages. However, these options often come with higher interest rates and stricter terms. According to a recent survey, approximately 40% of borrowers with bad credit are able to get a mortgage, but they end up paying an average of $10,000 more in interest over the life of the loan. This is where the importance of credit monitoring and investment in credit repair services comes into play. But that's not all. Some lenders are now offering alternative credit scoring systems, such as the Vantage Score, which takes into account non-traditional credit data, like rent payments and utility bills. This can be a game changer for individuals with bad credit, as it allows them to demonstrate their creditworthiness in other ways. For example, a person with a low credit score but a history of timely rent payments may be able to qualify for a mortgage with a lower interest rate. This is especially important for those investing in real estate or looking to refinance their existing mortgage. Now here's where it gets interesting. Some mortgage brokers are specializing in bad credit mortgages, offering borrowers access to a range of lenders and loan options. These brokers often have established relationships with lenders and can help borrowers navigate the complex mortgage application process. According to a recent study, borrowers who work with a mortgage broker are more likely to get approved for a mortgage, even with bad credit. This is a critical aspect of the mortgage process, as it can save borrowers thousands of dollars in interest and fees. But what about the risks? Borrowers with bad credit are more likely to default on their mortgage, which can result in foreclosure and a further decline in credit score. This is why it's essential to carefully consider the terms of the loan and make sure you can afford the monthly payments. A recent report found that approximately 20% of borrowers with bad credit default on their mortgage within the first 5 years. This highlights the need for borrowers to prioritize credit monitoring and work on improving their credit score over time. Now, what I'm about to tell you next is something most people completely miss. There are actually government programs available to help borrowers with bad credit get a mortgage. For example, the FHA's Back to Work program allows borrowers to qualify for a mortgage just 1 year after a foreclosure or bankruptcy. Additionally, the VA loan program offers lenient credit scoring requirements for eligible veterans and military personnel. These programs can be a lifeline for those struggling to get back on their feet, especially in the current job market where salaries are stagnant and career advancement is challenging. Let's take a deeper dive into the world of mortgage insurance. This is a critical aspect of the mortgage process, as it can protect both the lender and the borrower in the event of default. There are several types of mortgage insurance available, including private mortgage insurance, PMI, and mortgage insurance premiums, MIPs. According to a recent report, the average cost of PMI is around $100 per month, while MIPs can range from 0.3% to 1.5% of the original loan amount annually. This is a significant expense, but it can be worth it for borrowers who are able to get a mortgage with bad credit. But which is better, PMI or MIPs? The answer depends on your individual circumstances. PMI is often required for conventional loans with a down payment of less than 20%, while MIPs are typically required for FHA loans. According to a recent study, borrowers who opt for PMI can save around $500 per year in insurance premiums, but they may end up paying more in interest over the life of the loan. This is a complex decision, and borrowers should carefully consider their options before making a choice. Now, let's look at some real-life examples of borrowers who have successfully gotten a mortgage with bad credit. One borrower, who had a credit score of 580, was able to qualify for an FHA loan with a 3.5% down payment. Another borrower, who had a credit score of 620, was able to qualify for a conventional loan with a 10% down payment. These examples illustrate the importance of working with a mortgage broker and carefully considering your loan options. They also highlight the need for borrowers to prioritize credit monitoring and work on improving their credit score over time. But what does this mean for you personally? If you're struggling to get a mortgage due to bad credit, there is hope. By working with a mortgage broker, exploring alternative credit scoring systems, and considering government programs, you may be able to qualify for a mortgage. According to a recent survey, approximately 70% of borrowers with bad credit are able to get a mortgage, but they often end up paying higher interest rates. This is why it's essential to carefully consider your loan options and work on improving your credit score over time. So, what are the practical takeaways from this story? First, it's essential to prioritize credit monitoring and work on improving your credit score over time. This can involve checking your credit report regularly, disputing errors, and making timely payments. Second, consider working with a mortgage broker who specializes in bad credit mortgages. They can help you navigate the complex mortgage application process and find the best loan options for your circumstances. Finally, don't be afraid to explore alternative credit scoring systems and government programs, which can provide more flexible credit scoring requirements and lower interest rates. As we look to the future, what can we expect from the mortgage industry? According to expert predictions, the use of alternative credit scoring systems is likely to become more widespread, providing more opportunities for borrowers with bad credit to get a mortgage. Additionally, the rise of fintech companies is expected to disrupt the traditional mortgage lending model, making it easier and more convenient for borrowers to apply for a mortgage online. This is a critical development, as it can help to increase access to credit and reduce the cost of mortgage lending. In conclusion, getting a mortgage with bad credit is not impossible. By understanding the options available, working with a mortgage broker, and prioritizing credit monitoring, you can increase your chances of getting approved for a mortgage. Remember to carefully consider your loan options and explore alternative credit scoring systems and government programs. Don't forget to like and subscribe to our channel for more exclusive content on finance, investment, and real estate. Our next video will explore the best strategies for investing in cryptocurrency and AI technology, so be sure to check it out.